Good morning, everyone. We're going to start the webinar in 2 minutes. I'm waiting for Advocate Val to join the meeting. At the meantime, I'm going to launch a poll if we can answer yes or no while we wait for these 2 minutes for Advocate Val to join us. Thank you. Okay, good morning, everyone. Welcome to the webinar that we have today, and thank you so much for registering. I think other property practitioners will join us while we're in the proceeding because we don't want to be late. We want to keep up to the program. I am going to change the program a bit while I sort out the system for Advocate Vile. I'm going to ask Thomas Makubo to present first. You'll see on the program we shared with you yesterday that we were going to have two speakers. Advocate Vile, Mr. Thomas Makupo, he's in the compliance department. He's a chartered accountant and he's currently a manager in the audit compliance. And as property practitioners, you know, with the new legislation, you've been asking yourself, okay, I want to open a firm, but I don't want to hold a trust account. What is this exemptions? I want to be exempted. What is the process? So the presentation that is going to give us today, it's going to give us clarity on some of the questions that we have. Some few maybe housekeeping rules. I've muted everyone for a reason so that we allow Mr. Makupo to give a presentation. Once he's done giving the presentation, I am going to take the charts, the questions that are on the charts. He's going to respond to all of them. Then we're going to unmute you. You raise your hands, and we're going to take the hands according to the numbers that you raised your hands on. And we're going to respond to everyone, if I may say. So maybe let's welcome now Mr. Thomas Makupo from Audit Compliance is going to share with us a presentation. Please enjoy. Thank you.
Thank you, Naledi, for the introduction. Good morning, everyone. I will be taking you through the audit requirements as well as the trust account exemption requirements. The issues that I will be presenting on this morning, they are more relevant and they are more important to principals and aspiring principals of business property practitioners. Throughout the presentation, I will be using the term business property practitioner a lot. And the term business property practitioner itself, it refers to the various business forms under which property practitioner activities can be conducted. So a business property practitioner can be a company, it can be a close corporation, it can be a partnership, or it can be a sole proprietor. And the reason I will be referring to business property practitioners is because most of the audit requirements and the trust account exemption requirements that I will be sharing with you this morning, they apply to the business property practitioners, that is the juristic persons. So they do not apply to the natural persons, except in cases where a property practitioner is trading as a sole proprietor. So when we talk about the audit requirements, I think the first question on everyone's mind will be, who is required to submit an audit report on the trust accounts to the PPRA? And my answer to that question is quite a simple one. So if you are a business property practitioner and you do not have a trust account exemption letter as indicated on this slide, then your auditor is required to submit an audit report to the PPRA. So only those business property practitioners who have been issued with this trust account exemption letter are not required to submit an audit report on the trust account. So the trust account exemption letter is the one that is on the screen, on the right hand side of your screen. So it is quite straightforward. If you do not have this letter, you must appoint an auditor who is registered with the Independent Regulatory Board for Auditors to annually audit your trust account, and your auditor need to register on the auditor's portal if they are not registered already. And the auditor's portal is accessible on the PPRA website. And then once they register, they can submit the audit report on your behalf. So I've spoken about who must have an audit on the trust account. What about the financial statements? Let me hasten to point out at this stage that whether you have a trust account exemption or you do not have one, you need to have your financial statements. So every business property practitioner must annually have financial statements for their business. And the question is, those financial statements, do they need to be audited? And the answer to that question is quite a simple one. So the general rule is, if your business annual revenue is 2.5 million rand and above, your financial statements must be audited. However, there is an exception to this rule. And the exception is that if you have been issued with a trust account exemption letter, like the one that I've just shown you on the previous slide, you do not need to have your financial statements audited, even if your revenue is above 2.5 million. So for those that require the financial statements to be audited, the audit needs to be done by an IRBA registered auditor within 6 months after your financial year end. These audited financial statements are not required to be submitted to the PPRA on an annual basis, unless specifically requested in writing by the PPRA, or if requested during a PPRA inspection. Then the next question that I want to address is, what if my revenue is below 2.5 million rand, or I have a trust account exemption letter? What happens to my annual financial statements? So in these two instances, you need to have your financial statements independently reviewed instead. So the independent review of the financial statements, just like an audit, it must still be done within 6 months of your financial year end. And again, you do not need to annually submit the independently reviewed financial statements to the PPRA unless you have been specifically requested in writing to do so, or unless they are requested during a PPRA inspection. I started my presentation by saying that you need to be in possession of a trust account exemption letter for you not to be required to submit an audit report on the trust accounts. So the question is, do I need some sort of permission from the PPRA to have my financial statements independently reviewed? And the answer is no. If you meet the requirements for an independent review, as I've explained in the previous slide, you can go ahead and have your financial statements independently reviewed. You do not need PPRA's permission or written consent to have your financial statements independently reviewed. However, let me point out the requirements in terms of the Companies Act. So if you read the Companies Act, there is a concept called Public Interest Score, which is PIS for short. So your PIS, or your Public Interest Score, will assist you with answers to 2 questions if you are a company. So 1, it will assist you on whether your financial statements must be audited or independently reviewed. And 2, if they are required to be independently reviewed, who can perform the independent review? And to calculate your public interest score, there are 4 criteria that you need to consider that are listed in the company's regulations, which I have indicated on this slide. So it is a points-based system. Your accountant must be able to calculate this public interest score for you, or your auditor might also be able to calculate it for you. So according to this public interest score calculation, you are awarded 1 point for every employee that you have, 1 point for every million rand in third-party liability that you have, 1 point for every 1 million revenue for the year that you have, and 1 point for every shareholder in your company. So if you've got 10 employees, that will be 10 points for you. If you've got 20 million rand in revenue, that's another 20 points. So you need to add all the points for these 4 criteria to arrive at your public interest score. Let me explain now why it is important for you to know your public interest score, let's just say for argument's sake that you qualify for an independent review, both in terms of the Property Practitioners Act and the Companies Act. And the question is, who must perform the independent review of your annual financial statements? And let's say you do not have a trust account exemption letter that are indicated on the first slide. Just a moment, I think I skipped some slides here. Just one moment. Okay, thank you. Sorry for that. So I was saying, let's say you do not have a trust account exemption letter and your revenue is below 2.5 million rand. Who must perform your independent review on your financial statements? In that case, the same registered auditor that audited your trust account must be the same auditor who must also independently review your annual financial statements. Remember, if you do not have a trust account exemption letter, you are required to appoint an auditor for your trust account. So you need to use that same registered auditor who audit your trust account to also do an independent review of your financial statements if your revenue is below 2.5 million rand. That is the first category. The second and third categories, they relate to those with a trust account exemption letter. So if you've got a trust account exemption letter, who must perform your independent review of your financial statements? Remember, I said that if you've got a trust account exemption letter, you do not need to have an audit on your trust account. And therefore, by implication, you do not need to appoint a registered auditor. Then the question is, who will perform the independent review of your financial statements in such a scenario? And the answer lies in the public interest score that I just mentioned. So if your public interest score is 100 and above, you need to appoint either an RBA registered auditor or a chartered accountant registered with the South African Institute of Chartered Accountants, SAICA. So you have got two options. If your public interest score is 100 or above. However, let's say your public interest score is below 100, or let's say you operate as a sole proprietor and the issue of public interest score does not apply to you. Because remember, the public interest score only applies to registered companies. Then in that case, who must perform your independent review? In this case, you've got 10 options. So you can appoint an IRIPA registered auditor to do the independent review. You can appoint a SAICA registered chartered accountant to do the independent review, or you can appoint an accountant who belongs to any of these listed accounting bodies. These accounting bodies, they were accredited by the CIPC under the company's regulations. So these are not PPRA accredited accounting bodies. Specifically, they were appointed by the Registrar of Close Corporations under the Close Corporations Act. So if your PIS is below 100, or you do not operate as a company, we have got 10 professional bodies from which you can choose your independent reviewer. And those are the bodies that I've listed on this particular slide. I know that has been a mouthful. Let me just summarize the audit requirements that I've covered so far. If there is one slide that you should be able to take away from this session, it should be this slide. So as a business property practitioner, you can fall in one of the three categories in the first column of this slide. So either you have a trust account exemption letter, which places you in the first category. So the first category is those with a trust account exemption letter.
The sound is so weird on the Lenovo. Listen to it, you can hardly hear it.
Hi, can you please mute yourself? I'm not sure who's speaking. It sounds like Monica. Did you unmute yourself? Please, let's mute. Mr. Makupo, maybe let's try the volume to 100 on your side if there's some people who are struggling. And if anyone is struggling with the sound, maybe let's try to refresh. It could be a connection or network issues. Thank you, Mr. Makupo. You may continue.
Okay, thank you, Naledi. So I was saying the first category belongs to those who have got a trust account exemption letter. That will be the first category of a business property practitioner. If you do not have a trust account exemption letter, then you belong to the second category, which is category 2. Then only a few of you will fall in category 3, which relates to payment processing agents. So you need to belong to any one of these 3 categories for you to understand the audit requirements applicable to you. If you belong to the first category, your financial statements need to be independently reviewed unless you meet the requirements in the Companies Act for an audit. And then on the trust account side, you do not need to submit anything to the PPRA if you're in category 1. If you're in the second category, you need to have your financial statements independently reviewed only if your revenue is below 2.5 million rand. Otherwise, they need to be audited. And then on the trust accounts side, you need to submit an audit report on the trust account within 6 months of your financial year end. And then the third category, where only a few belong, I think it's just a handful, that is for payment processing agents. The requirements are quite different and quite detailed. So on the financial statement, a payment processing agent needs to have their financial statements independently reviewed if the revenue is below 2.5 million, or they need to be audited if it's above 2.5 million. And then payment processing agents, they actually submit 3 sets of reports annually to us. And I think most of you do not have to worry yourself with the third category. So please know your color, pick your color, and then at least you have a better understanding of the audit requirements applicable to you. Let me now turn to the issue of obtaining the trust account exemption letter that I started when I began my presentation. The question is, how does one get that exemption letter? Put differently, who qualifies for such an exemption? And there are 3 categories that qualify for this trust account exemption as per Regulation 2 of the Property Practitioners Regulations. Category 1 are those business property practitioners that never received trust monies. Category 2 are those businesses that received trust monies previously, but no longer do. And then the last category are those businesses that mandate a payment processing agent to administer trust monies on their behalf. In other words, those who have outsourced the administration of trust monies to a payment processing agent. Those ones, they also qualify for a trust account exemption. However, if you fall in category 3, which is the category relating to the outsourcing to a payment processing agent, please make sure that the payment processing agent that you outsourced to is 1, registered with the PPRA and has got a valid fidelity fund certificate. 2, they operate a trust account environment that complies fully with the requirements of the Property Practitioners Act. And then 3, also make sure that they are audited on an annual basis and they submit the 3 required reports as indicated on the previous slide. So if you belong to any of these three categories on this slide, you qualify for a trust account exemption and you are eligible to receive a trust account exemption letter. However, in order to obtain the trust account exemption letter, there are a few hoops that you need to jump through, depending on your current status. So if you're a new business property practitioner who has never been issued with a Fidelity Fund certificate before, then the process is straightforward. Firstly, you need to apply to register your business with the PPRA through the agent's portal, and you obtain your unique firm reference number. Once you have the PPRA issued firm reference number, then the principal of that new business, they need to complete an affidavit, the format and contents of which you will be able to find in Regulation 2 of the Property Practitioners Regulations. That affidavit, it needs to be stamped and it needs to be signed by a Commissioner of Oath. And then you can scan and email the affidavit to the PPRA Audit Compliance Department using the email address that is on this slide. And then you will then be issued with your trust account exemption letter, which you can then take to the PPRA licensing department to finalize your business registration. So once you have received your trust account exemption letter, you do not need to open a trust account. You do not need to appoint an auditor. And I think for a new business property practitioner, the process seems pretty straightforward. Now let's assume you are already registered with the PPRA as a business property practitioner, and you do not want to mandate a payment processing agent, but you want a trust account exemption letter. So the starting point here is you already have a trust account, because remember, it was mandatory to have a trust account under the Estate Agents Affairs Act. So firstly, you need to pay out whatever trust monies, if any, are sitting in your current trust account. That will be the first step. And you have to pay that money out to the clients. And then after that, you can close your trust account with the bank. After that, please request your auditor to come and audit your trust account up to the date that you closed it with the bank. And then your auditor must log in on the auditor's portal and submit a winding up audit report. Only after the winding up audit report has been submitted by your auditor can you then email your affidavit plus the bank confirmation letter confirming that the trust account has been closed to the email address on this slide. You will then receive your trust account exemption letter, and from the date on the letter, your auditor will no longer be required to submit an audit report on the trust account to the PPRA. Another category of business property practitioners that may want to apply for a trust account exemption letter might be managing agents, which are already registered with the PPRA and who do not want to mandate a payment processing agent. For these, the process is pretty much the same as the one that I have just explained, except for one additional requirement. The additional requirement is that they need to also email the list of all their body corporate clients together with individual letters signed by the trustees of the various body clients on their list, confirming that the managing agent does not handle any trust monies on their behalf. You can find the format of these letters on the guidelines that are available on the auditor's portal landing page. And the rest of the process for managing agents is the same as the one that I have just explained in the previous slide. The last category that I'm going to discuss are those existing business property practitioners who want a trust account exemption letter because they've outsourced the trust account administration to a payment processing agent. The process here is a bit different. So firstly, you need to approach the payment processing agent to sign a mandate with them. That's the first step. If you have been using a payment processing agent previously, you do not need to transfer any trust money to them because they will be having your trust monies anyway in their trust account. However, if you are mandating a payment processing agent for the first time, you need to transfer the trust monies that you hold in your own trust account to the payment processing agent first, and then you have to close your own trust account. The payment processing agent, when you approach them for a mandate, they will give you a letter confirming that they've accepted your mandate. Please make sure that your auditor, they perform an audit of your trust account, your own trust account, up to the date of the letter from the payment processing agent. And then after the audit, your auditor must submit the winding up audit report. Then after that, you need to submit the affidavit, the bank letter confirming closure of your own trust account, the letter from the payment processing agent, and you need to submit all those to the email address that is on the slide. You will then receive your trust account exemption letter, and from the date on that letter, your auditor will not be required to submit any audit report on the trust account to the PPRA. The responsibility actually of submitting the audit report will then shift to the payment processing agent from the date on the letter from the payment processing agent. Again, I feel like I've given you a mouthful. So this table, it summarizes the trust account exemption requirements. You will see that for a new business property practitioner that is registering for the first time and we never operated a trust account before, there's only one requirement, and that is the affidavit. Then the requirements become more as we move from existing estate agencies to those using the services of payment processing agents, and then finally to the managing agents. So again, pick your color. What color are you? And then you at least understand the requirements in as far as trust account exemption is concerned. Let me now focus the rest of my presentation on those business property practitioners that do not have the trust account exemption letter. So after completion of the audit, their auditors, they need to register, if not already registered, on the auditor's portal. They need to log in and submit their audit report electronically to the PPRA. The auditor's portal, it is accessible on the PPRA website, so you'll be able to see it there. And only those auditors that are registered with the IRBA can register and log in and submit an audit report. Remember, I said if you have a trust account exemption letter, you do not need to submit your financial statements to the PPRA. So we do not have a platform for independent reviewers to submit anything to the PPRA. The auditor's portal is the only platform that we have, and it's for use by auditors of those business property practitioners that do not have a trust account exemption letter, because those auditors are the only ones required to submit an audit report on the trust accounts to us. So the auditor's portal, I repeat, is just for auditors. We have audited the trust account. It is not a platform for independent reviewers because the financial statements themselves are not required to be submitted to the PPRA. We may request them, and then if we request them, you need to then email them to us based on the email address provided in that request. So the submission of an audit report, it has to happen within 6 months of your financial year end. So what happens if you miss the 6-month deadline? If your auditor misses the 6-month deadline, then the PPRA, they will impose a late submission penalty, which is currently 20 Rand a day. This penalty will be imposed for a maximum period of 3 months after the submission deadline. If your audit report remains outstanding after the 3 months of the submission deadline, you will attract an additional fine of 25,000 Rand, which is issued to you through a compliance notice that you will receive from the PPRA Inspections Department. This 25,000 Rand fine is in addition to the 20 Rand a day penalty for the first 3 months. And I think some of you here might already have received these love letters in the form of compliance notices from the PPRA Inspections Department. So make sure your auditor submit the audit report on time and within 6 months of the financial year end. Let me now move on to the non-compliance issues that are reported by auditors. So when the PPRA receives an audit report on the trust account, there may be non-compliance issues in the audit report reported by an auditor. So these are basically non-compliance with Section 54 of the Property Practitioners Act. These non-compliance issues, they attract fines, and these fines are also issued in the form of compliance notices that are issued by our PPRA Inspections Department. And you can see some of the fines on this slide. And some of you might have been recipients of some of these compliance notices already. So what happens if you do not pay the fine within 30 days of receiving a compliance notice, or you fail to make a payment arrangement with the PPRA within 30 days of receiving a compliance notice? In those instances, you will then be referred for adjudication, where you will be required to appear before an adjudicator and make representations, and then the adjudicator will then rule on the matter. Yeah, I feel like I've been speaking for a long time, and I hope it's not information overload. However, let me just leave you with the following resources that you can look at on your own spare time. So for further reading of the issues that I have covered, and for more details, you can go to the landing page of the Auditors Portal on our website, and you will be able to see this guideline. It has got detailed requirements, frequently asked questions, and it also has got most of the templates that I have been talking about. So go and have a look at it, and also share it with your accountants, your independent reviewers, and your auditors, so that they understand the requirements. If you've got any further questions on audit compliance and trust account exemption queries, there is an email address that I have indicated on that slide. If you have been a recipient of one of the love letters, those compliance notices, I've also included the email address for inspections department, because you need to make representations to that specific email address within 30 days. Otherwise, you risk having your matter escalated for adjudication. So thank you. Naledi, I will take any questions.
Thank you, Mr. Makupo. That was very informative. And I think it's important for these webinars so that we get this information, so that when property practitioners, they come to register, the registrations department doesn't delay your FFC, doesn't delay the process if all documents are compliant, if we follow the process. So I think it's important. So now what I'm going to do, we're going to take hands. I have other questions, Mr. Makupo, for you on the chat. So while I'm going to unmute people to ask questions, they'll raise their hands, we'll take them one by one. I have a question from Thinus. I don't know if you want to take that. There are several accountants that may do independent reviews. Why does I think she wanted to say, why do you require an auditor that is registered at IRBA to do the review? Did you get that, Mr. Makupo? Let's take that while I unmute others.
Yes, I got that one, lady. No, thank you for the question. So we only require an auditor to do an independent review if the property practitioner does not have a trust account exemption letter. In other words, if you don't have a trust account exemption, you are going to appoint an auditor in any case to audit your trust account. So we strongly suggest that that same auditor will have to do the independent review of your financial statements. Because remember, there is a link between your financial statement and the trust accounts. So we do not want a situation where you appoint different people to do those two audits. So an independent review is only done by a registered auditor if you do not have a trust account exemption letter. Otherwise, if you have got a trust account exemption letter, you are free to appoint any of the other accountants to do the independent review. Thank you.
Okay, thank you so much. I'm going to take another one from the chat. It says, good morning. What happens if we have a trust account, but we never use it? This question, Mr. Makubo, is from Komodo.
Thank you, Komodo, for the question. If you have never used it and you want to apply for a trust account exemption letter, then you need to close that trust account. You still need your auditor to do a winding up audit report, and they need to submit that audit report first before we can even grant you a trust account exemption letter. Because remember, we do not want to take it from you that there were no transactions with the trust account. We rather trust the auditor to tell us that. And the only way the auditor will tell us that is through the submission of the winding up audit report. Thank you.
Okay, thank you so much, Mr. Makubo. We're going to take questions. The first one is from BM. The name says BM. Please unmute yourself and ask Mr. Makubo a question.
Yes, sure. Good morning and thank you very much. So I have closed up my trust account. I got the bank letter, I did the affidavit, but I actually have not done the winding up letter as yet. How long does one have to do that? And I've just submitted an audit report that was meant for last year because I got an email from a PPRA that, you know, that one was missing. So I can see that I missed this important step of getting the winding up letter audit report. So going forward, how long have I got? Because I just closed the trust account in February. Thank you.
Okay, thank you, BM. If you closed the trust account in February, what was your financial year end? If I may ask.
28 Feb.
Okay, so in that case, if you submitted an audit report after 28 Feb, then it also will be the winding up audit report. The problem was going to happen if you close the trust account after financial year end, then in that case, you were supposed to submit an additional winding up audit report. Thank you.
Okay, thank you.
Okay, thank you, ma'am. Let's take Carl. Carl, please unmute yourself and ask a question.
Hi, Thomas. Can you guys hear me?
Yes, we can.
Thank you. I may have missed it, but we're in the process of registering a managing agent. And I understand that before we can actually submit the firm registration papers, you need to send an email to audit@ppra.org.za with the exemption form E1 as well with an affidavit. When I get a reply from that, do I get a reference number for the Section 23 exemption so I can include it in the application form?
Okay, thank you, Carl, for the question. For Audit Compliance Department to issue the trust account exemption letter, you should have a reference number from our licensing department. So you need to have the reference number. I think for managing agents, it starts with an MAF, the letters MAF. Once you have got that number, then we will be able to issue you with a trust account exemption letter.
Okay, but
without that number, it will be impossible for us to issue the trust account exemption letter.
I understand that, but my question is more about that the letter that we get from your compliance or audit department. Will that include the reference number?
Yes, that's correct, Carl. So all our trust account exemption letters, they've got unique reference numbers.
Perfect.
And we use those ones to also check if some of you are not forging those letters.
No, of course. And then just, is it only necessary to add the reference number, or should we also attach the exemption letter that we received from your department to our application form?
For licensing purposes, you need to give them the trust account exemption letter as well.
All right. Thank you very much.
Thank you, Carl.
Thank you.
Let's go to Golden. Please ask your question.
Hello.
I think it's Golden Key Properties. Please unmute yourself.
Thank you.
Very clear so far. I just want to try a certain fact. We have closed our trust account. We have the exemption letter. We find the fact that for the financial statements and not the trust account, that threshold is 2.5 million. So if it's less than 2.5 million, it's an independent review. And this is my question. And then above 2.5 is the full audit by an auditor that is registered with the various bodies. My question is this 2.5 the difference? Is that the threshold? Million. Hello?
Okay, thank you. Thank you. I heard your question. So the 2.5 million rand threshold, it only applies to those who do not have a trust account exemption letter. If you have got a trust account exemption letter, you do not have to worry about the 2.5 million threshold. You qualify for an independent review unless you meet the Companies Act requirements of the public interest score.
Okay.
Thank you.
So that is another factor, the public interest score. Okay, I'll go and check that.
Yeah, thank you.
Okay.
Thank you.
Thank you, ma'am. We're going to take questions until 10. Please do not lower your hand. Please do not leave the webinar. The next speaker is going to be Advocate Vile. Once she's done presenting, we're going to answer everyone. All the questions today, we are here, we're going to answer them. But for now, let's take questions until 10, Mr. Makupo. I have Ellen. Ellen, please unmute yourself, ask your question so Mr. Makupo can assist.
Good morning, can you hear me?
Yes, I can hear you.
Oh, good morning. The question I want to ask you is, if we have got an exemption, does our auditor still have to submit the independent review on the PPRA portal by June each year, or does the review just have to be done and available in case there is an inspection?
Okay, thank you. I think you answered yourself on the second part of your question. So if you have a trust account exemption, your auditor does not need to submit an audit report, and your independent reviewer does not need to submit the annual financial statements to us. They will only be required to submit them to us if we request them in writing or during a PPRA inspection. If we request them in writing, we will tell you the email address where you need to email those financial statements. So the auditor's portal is not meant for independent reviewers to submit financial statements. It's only meant for auditors to submit an audit report on the trust account. Thank you.
Thank you for that. Let's go to Marilyn. Please unmute yourself.
Hi, can you hear me?
Yes, I can.
Okay, I just want to find out, how do you deregister an agency? What's required? Because in 2019, well, financial year 2020, we closed one of our agencies, and we did the audit, the final report. Everything was submitted, but now I keep getting these a letter of demand from you guys for outstanding, and this agencies were supposed to be deregistered in 2020 already. And I don't know what they want, because I sent them the bank letters, I sent them everything. What exactly is required extra? Because I don't know anymore. I can't get any answers.
Okay, I think the first step that you did was correct, to submit your winding up audit report and to close your trust account. So that is the first step. There is another step from our licensing department, where you need to then officially request for the deregistration so that you are deregistered on the system. And it seems maybe that's the second part of the process that you did not manage to complete.
Yeah,
But,
you know, yeah, I've sent so many mails to them asking for it. I don't, and every time they ask me, send us proof of deregistration. I said, well, I've been trying to do it since 2019, but yeah, I don't know who I should talk to because yeah, I'm lost.
okay, Marilyn, I think Advocate Val will be able to assist you on that one, maybe later on.
Okay, thank you so much.
Okay, thank you, Marlene. Can I say, after the webinar, we're going to share email addresses of relevant departments so they can help. Some of the questions that we have under registrations and licensing, maybe let's pause them for now and allow Advocate Val to give a presentation. Then we'll take the questions for the FFCs and she will address some of that. Propex, you can unmute yourself and let's hear your question.
Good morning. I just have a question. We received exemption from a trust account from the EAB still. Do we need to apply again from the PPRA, or is that exemption still just going on?
Okay, thank you for your question. I think the exemption that you are referring to was that a PTI exemption, because we never issued trust account exemptions under the old act. So the issue of trust account exemption, it's a new phenomenon under the new act. So if you have got one under the Estate Agents Affairs Act, it does not apply anymore. You need to get one under the Property Practitioners Act.
Okay, thank you so much.
Thank you so much. Yulinda, please ask your question.
Hi, good morning. Yes, I've actually put my questions in the chat box. I've seen on one of the slides, it refers to that the trust account exemption will be effective from the date on the exemption letter, and that from that date, your auditor is not required to submit an audit report. But my trust account was closed last year, and my wind-up audit was sent to the PPRA in August 2023. And I'm still waiting for my exemption letter after numerous attempts to the audit compliance department, and I haven't received my exemption letter. So is the expectation that I must do an audit report, although my trust account has been closed?
Okay, thank you, Yolinda, for your question. So the effective date of the exemption will be the date that you closed your trust account. So we do not expect you to have an audit of the trust account which is no longer in existence. So you will see when you receive your trust account exemption letter, it will be the date when the letter was issued. And then right at the end, it will indicate the date that your trust account was recorded as having been closed on our system. And from that date on, you do not need to submit an audit report. Thank you.
Thank you. Thank you.
Okay, thank you so much. Mr. Makupo, maybe let's go back to the chat. We have a question from Amori. If your revenue is below 2.5 million, but you operate with a trust account, do you still need to be audited, or can you also be independently reviewed?
Okay, thank you for that question. So if you have a trust account, if your revenue is below 2.5 million, you qualify for an independent review. If your revenue is above 2.5 million, you must be audited. So the revenue threshold, it applies to those who operate a trust account. Below 2.5 million threshold, you have an independent review. Above that, you have an audit.
Okay, thank you for that. Mr. Makupo, I have another one. It's from Mbasa. Mbasa says, does the exemption letter have a validity period?
Okay, thank you for that question. No, it does not have. But if you look at the affidavit that you need to submit as part of your application for the trust account exemption, it says the principal has an obligation to notify PPRA if their circumstances change. Let's say in future they want to handle trust monies, they've got 60 days to give notice to the PPRA, and then you will be able to withdraw the trust account exemption letter. So it's only withdrawn at the request of the principal if their circumstances change. Otherwise, it is no validity date.
validity period. Thank you so much. Let's go back to the questions. We are 6 minutes away to the next speaker, 10 o'clock, as she prepares to come in. Let's take Yolanda. Please ask your question and mute yourself. Okay, Yolanda.
That is my question.
Okay. Yes, Yolanda, please say that again.
The previous question was me, so I don't know if my hand is not up, I'll have to remove my hand.
Okay, please lower your hand. I'll also lower hands that if you ask your question, let's go to Lynette. Lynette.
Good morning, everyone. I just would like to ask you regarding my auditor doesn't seem to actually understand how to do the winding up. So I've applied for exemption, but we have to do the winding up, obviously, and he seems to be battling with that process. And it's very frustrating. Is there a way that the auditor can be guided through this process?
Yes, Lynette, thank you for the question. Yes, we can. We are here actually to provide technical guidance to auditors who do not understand the audit requirements. So you are free to ask the auditor to send us an email at that email address on the slide, and we'll be able to take them through the requirements for a winding up audit.
Okay, thank you,
Thank
Mr.
you very much.
Mampupo.
Thank you.
Helen. Helen. Okay, maybe she's struggling with connection. Let's go to Richard. We'll come back to Helen. Richard, please come through. Helen, are you there?
Yes, I am. I have asked my question already.
Okay, please lower your hand. Richard, please come in.
Yes, can you hear me?
Yes.
Great. Yeah, my question is, if you have two trust accounts that you used in the past, one you continue using and the other you've now discontinued, do you then just close it at the bank? It's got zero balance in it. And then from a PPRA point of view, in the year-end audit, is anything required to be submitted regarding that one closed bank account or trust account?
Yes, Richard, thank you for your question. So at the end of the year, your auditor will need to submit an audit report on the trust account. Yeah. And then when they submit the audit report on the auditor's portal, there is a section where they are required to notify us if any of the trust account has been closed. Yes. And if there are any new trust accounts that have been opened.
I understand, yes. They, on the drop-down menu, they select the bank account or whatever, and I think we just submit a copy of proof, is that right, from the bank that the account has been closed, and that's pretty much it.
Yes, that's correct. Actually, when your auditor notifies us through the auditor's portal that a trust account has been closed, they will immediately receive a letter where we request the letter confirming closure of that trust account.
Yes, okay, brilliant. Okay, and then what gives rise to the need for the winding up process? Is that only once you have no trust accounts left and you would like an exemption letter?
That's correct, yes. So when you have ceased the trading or you want a trust account exemption letter, only in those two instances will you need to submit a winding up audit.
Okay, great. Thank you.
Thank you, Richard.
Okay, thank you, Richard. But we actually wanted Richard number 1, but I see Richard number 3 has asked the question, unless if you're connected with 2 devices. Richard, are you happy? Do you still want to ask a question? Let me just check his surname because there's 2 Richard. Richard Mercado, do you want to ask a question?
Oh, yes. Thank you, Naledi, and thank you to the listeners.
Okay.
I just wanted to ask a quick one, but I think Richard did ask more or less the similar question, because I did submit my application for an exemption, and then I closed my account in July last year, and then I got a letter from you guys saying that we need to submit a wind-up audit report from my trust. But the problem that I have now is my auditor is dilly-dallying. I'm not sure. It's very difficult to get hold of this guy. Is it possible perhaps to get another auditor to help me with this in this regard, or should I wait until such time that when he decides to send that to you?
Okay, thank you, Richard. No, you are free to change auditors. So you are free to appoint a new auditor to do your winding up audit.
Hello?
Hi, sir. I think he didn't hear you, Mr. Makupo. Can you repeat your answer?
Yes, Richard, I was saying you are free to change auditors. So you are free to appoint a new auditor to do your winding up audit.
Okay, thank you so much, sir.
Yes. Okay. The questions that we are getting on the chat, please, when you ask a question, please put your email address so that even after the webinar, we are still able to answer those questions. So what I'm going to do now, I'm going to take Pamela as the last property practitioner to ask the question. Please do not lower your hand from 3 until the last hand. We are going to come back. Mr. Makupo is just going to take a comfort break now. He'll come back and take the rest of the questions. Please don't lower your hand. We want to introduce the next speaker. Pamela, please ask your question.
Hi, good morning. Can you hear me?
Yes, please ask.
We have submitted our request for an exemption from holding a trust account. We've submitted all of our documents, however, we have not received a confirmation letter that our account has been exempted. Do we still have to submit our audit report by August?
Pamela, I struggle to hear you. I don't know, Mr. Makupo, could you hear her?
Yes, I heard Pamela. I think Pamela is saying they submitted the trust account exemption application, although they don't have the trust account exemption letter. And I think the question was whether do they need to submit their audit report by August. And my answer to that is, I'm not sure when you close your trust account, but if you close your trust account before your financial year ends, or if it's before February, you do not need to submit the audit report by August. But you need to follow up on the trust account exemption as well.
Okay, perfect. Thank you, sir.
Thank you, Pamela.
Okay, thank you, Mr. Makupo. We will revert back to you shortly. Please maybe stop sharing so that we allow Advocate Val to share her presentation so she can take us through. So we're going to introduce the next speaker. She is the acting executive in the licensing, registrations and exemptions department. And she's going to explain, because remember in the new legislation, we have new categories that we have to regulate. And we know that there's candidate property practitioners, what we used to call full status, we call them non-principals now, and we also have principals property practitioners, but we all have questions. What is the process now under the legislations to register, especially now that we can also register managing agent? And I think it's important for this webinar because when you're sending your applications in the registrations department so that the registrations officer don't struggle, the timelines and the processes can be quicker when you have the information. Thank you so much. I'm going to mute everyone. I'll unmute you when it's time for questioning. Advocate Vile.
Good morning, everybody. Good morning, Naledi. Can you see my screen?
Yes, we can. Can you please put it on slideshow if you can?
Sure. Right, good morning, everyone, and welcome to the Licensing and Registrations Business Unit presentation. We'll take us through some of the processes for registering and particularly for registering the new managing agent category. You will recall that under the new Property Practitioners Act, we have 12 categories that we are required to regulate now at the PPRA. And these are the various categories which we will have to look at. We will have to register property practitioners who operate in each of these categories or industries. And in terms of the regulations, you require a Fidelity Fund certificate for each and every industry in which you operate. I was asked yesterday by one of the practitioners if it was necessary for them to open a new company or register a new CC or firm outside of the PPRA in order to operate. And the answer for that is no. You will register with us. And in terms of that registration, you can register your existing estate agent company or CC or firm or trust as a managing agent as well. So you don't need to go and develop a new entity out there for registration purposes. So these are the ones that you will be aware of in terms of the Act which we now regulate, which includes estate agents, auctioneers, bond and bridging finance originators, HOAs who perform property practitioner activities, managing agents, property facilitators and intermediaries, business brokers, including sales of franchises and business undertakings, that's within the property market, developers who market and sell their own developed property, timeshare and fractional ownership practitioners, property advertising platforms, and property practitioners who specialize in collecting and distributing trust monies. These are known as payment processing agents. And then finally, attorney employees who are now in an industry of their own. So the Licensing and Registrations Business Unit is responsible for the three core functions which are set out in the slide. First of all is registration, which requires the issue of a Fidelity Fund certificate to all properly registered entities and practitioners, the renewal of Fidelity Fund certificates, which has to be done by a property practitioner every year by the end of October. And also we deal with exemptions in terms of Section 4 of the PPA. Please note that these are not education equivalency exemptions, which are a separate process. And those are as set out in Regulation 33, where if you have a specific qualification which has something to do with the property market or the property industry, you may apply to the education department and request that you be exempted from having to fulfill certain of the educational requirements of a property practitioner. And that is up to the education department to decide whether you can obtain an equivalency exemption, and if so, from what. But the exemptions we are talking about are exemptions in terms of Section 4, which allows you to be exempted from certain specific provisions of the Act if you convince the PPRA that there is good reason to do so, and if you comply with the requirements set out by the Act for such an exemption to be granted. Such exemptions are directed to the email address set out therein, Section 4 exemptions at the ppra.org.za, and we'll deal with those again a little later. So as you're aware, issuing FFCs is our core function, and we endeavour to ensure that they are issued timeously, correctly, and within legislative timeframes. You also need to be aware, simply from an information point of view, that we have two databases on our system relating to property practitioners, which are the two main ones, and these are your firm master database, which includes the profiles of every firm that is registered with us, and we have an individual master database, which has all the information on each individual who is registered with us. So we'll move on then to the process flow for registrations. I am currently the acting registrations executive manager after our previous executive left the regulator, and so I've just come in as the acting EM. So there are some aspects which I'm still getting up to date on, but certainly where we've had some backlog which we've inherited, we are fast reducing it and very soon expect to eradicate it. But for purposes of registering a managing agent firm, for those who are coming in as managing agents, registration of managing agent firms are required, but we need to register the directors first. So please be aware of that. You register as an individual, as a director of your managing agency firm first, and then you register your firm on our portal. So your first step is to go onto the PPRA agents portal. You'll click on Create New. You will then follow the various prompts, which will take you to the position where you have to select the industry in which you will operate. You will be required to accept terms and conditions. You then select Register, and you will then find that the password is generated by the system for your data. The system sends you an email with the password, and you will then use that password to log back into the portal And once you've logged in, you will enter the password, and then you'll be able to complete steps 2 and 3. You will note that on the far right, you will see a tab which says My Agency. That will allow you, as a managing agent director, to reserve the name of your firm. You click on that and you select the correct industry that you will be operating in, and you will then reserve the name. That name has to be checked by us and verified and validated, and that is done on a daily basis. So there is not usually any kind of delay in a name reservation process. However, please be aware that when you ask for anything on the website, it's necessary that you log a query in that regard. So you go to the log a query, and you simply put in an activity saying, please check my name reservation and approve it. You will wait until that name is approved. When it is, you will click on the approved entry, and it will take you to the terms and conditions, which you will accept, and you will then be taken to a screen where you can register your firm. You note that directors register the firm themselves, and once that is registered, the firm will receive an MAF number. Just as an estate agent firm had an F number with 6 digits, this managing agent firm gets an MAF number. That is created, and after that is created, employees can use that number to register under that firm, and employees will then use the process for individual registration. You then move to step 2 and upload the required documents, which would be your firm application form, your company documents, your trust account confirmation from the bank, or alternatively your letter of exemption, as mentioned by Thomas, your auditor's letter confirming who the auditor is for your firm, as well as a company resolution if there is a company involved, if there are 2 or more directors, and that will be appearing on your company documents. You also have to provide us with proof of your FIC registration. It's a FIC email which you receive from them, which confirms your registration and gives us your number. Remember that you also need to provide us with a BEE certificate in terms of section 5010, unless your firm is a sole proprietor or a partnership. The provisions of the regulations specify that if you are a natural person, the firm is a natural person, as opposed to a juristic person, you are not required to submit a BEE certificate. Only juristic persons are required to do so. You also must submit the firm's SARS tax clearance. That is whether you are a sole prop, a natural person firm, or whether you are a juristic person. Step 3 is the payment process, and that requires the payment of the registration fee. When you make payment using an EFT, please use your 7-digit PIN only, because our system will recognize it immediately and will allocate that payment, which means we don't have to do it manually. Remember that our system will register and recognize a 7-digit PIN on its own. It will not recognize the 7-digit PIN followed by JS Potgieter or whatever your surname is. So don't add anything else. And please remember that directors and principals' names details must be on your SIP-C document where there is a principal involved. We move on then to the registration of managing agent persons, and these here you will note managing agent directors register themselves individually first. They do that by going to the agent's portal. They click on New Property Practitioner, follow the prompts, and they will also follow the password generation process. When they receive the password, they will log back in and use the password and then complete the 2-step process. The first is step 2, which is the registration of the managing agent director themselves by attaching their supporting documents. And those will be your application form, your ID copy, and your proof of payment. These go to administrators for verification, and we will then advise you by email if the application is compliant and some payment is required, or if you've already made payment, we will we will advise if there's any other payment that may be required. We'll also give you the reference number and the banking details. Once we have proof that you have paid the FFC, after allocation of the payment, if it's required, the FFC will issue. Payment EFT using your 7-digit PIN, as I mentioned. If it's already been made, allocation of payment will be ensured and your FFC will then issue. Once it's showing as issued on the portal, you will be able to download it after 48 hours. Note that we do not send FFCs by email or by mail unless we specifically request it to. So if you have a problem downloading it, but it has been issued and you've had your 48 hours is up, you may then send us a query and say, please send me a copy. I can't download it, and we'll do that. Also remember that after uploading any documents or submitting any application form, please log a query and confirm to our staff that you have done so and you request that we please process it. And then we will be immediately aware of it and we'll be able to make sure that there's no delay. After that, the managing agent or directors will go to the firm and create that employees can register. Your managing agent employees follow a similar process. They register as individuals and they can only do so, as I've said, after the director has created the firm. They will work for a director if they're employed by a managing agent and not a principal at this stage. This is because your principal, in terms of our current processes, has passed certain qualifications and achieved certain status. That hasn't happened yet with relation to managing agents because we don't know yet what education requirements a director or principal of a managing agent needs to comply with. So for the moment, we are registering managing agents, directors as directors particularly. Employee managing agents must upload individual application forms, their ID copy, a letter confirming employment, which has to be on the company letterhead, and it must be signed by both the director and the employee. Payment then must be made by EFT using the 7-digit PIN, and if you need to look for your PIN, it will be on the email that was sent to you if this is a new agency. Otherwise, you can always give us a call at our call center and we'll give you your 7-digit PIN if you're already registered and you don't know it. Again, the FFC will issue if the application is compliant after 48 hours. We then move on to the process for estate agents. And as far as estate agents are concerned, candidate estate agents initially are usually the ones who will want to register as a first-time employee. And they will go to my PPRA agents portal, click on the Create New Property Practitioner, follow the prompts, make sure that you have your F reference number for the firm that you are going to be working with. Without that, we cannot register you. You need to make sure that it's correct so that we don't register you with the incorrect firm. You also need the reference number of the mentor that you are using. Currently, our system only allows you to register your mentor as the principal. That's something that we are in the process of working on to change that because the Act does allow that other qualified property practitioners could be your mentor in certain circumstances. And I'm aware that the Education Department has its own process in relation to what constitutes a mentor. So for the moment, you simply put in your principal's details and your principal's number. You then accept your terms and conditions and you click on register. You will again receive your email password. You log back in using that password and you then proceed with step 2 to attach your supporting documents, which is your ID document, your letter of employment signed by both the candidate and the principal. And by the way, we do have a template on the website as to what that letter should look like, and that will take you to step 3, which is payment. Again, if you use an EFT, your 7-digit PIN, and your FFC will issue if the documents are compliant, but wait 48 hours and then you will be able to download them. And please remember to log a query alerting us that you have uploaded documents and that you require attention. We're then moving on to new principals who are upgrading from a full status agent. Bear in mind that if you wish to become a principal, the Act and regulations define that a principal is somebody who is a business practitioner. In other words, who is the principal of a business practitioner. So you cannot be upgraded to a principal until or unless you have a firm that you are the principal of and you are operating a firm. So you need to register that firm, which you can do by going to My PPRA. You can click on existing property practitioners. You can put in your ID, your surname, and your 7-digit PIN. It will take you to your profile. On the far right, you will see reserve a name. You will be able to click on that, and then you'll follow the same process as for managing. An additional firm, you will use the agent's portal, go to the existing property and go through the reserve a name process and continue on the same line. We then move on to attorney employees. Attorney employees are required to go to the agent's portal, same as all the other practitioners. Click on new property practitioner, select your industry, which is attorney employees, accept terms and conditions, click register. You will receive your email with a password, which will have your own 7-digit PIN, as well as the password. You then log back onto the portal using the password. You complete the step 2, which is attaching supporting documents. That's your application form, your ID copy, and your letter of employment. Again, see the template, which is on our website. That will take you to step 3, which is payment. And if all is in order, you will be able to go back after 48 hours and download your FFC copy. Please note that all attorney employees use the same firm PIN. We have a database of attorney employers who are employers of attorney employees registered with us, and those all use the same firm PIN. That is your firm PIN that you will be registering under if you want to register as an attorney employee. You will not generally be required to enter it because it will take you automatically to that attorney employee database, but should you be required at some stage, that's the number. As far as fees for various things are concerned, in order to register a firm, remember that you do not have to make payment for the firm's Fidelity Fund certificate or registration. Only natural persons pay registration fees and not the firm itself. For all other registrations, you will see your schedule of fees. Okay? The schedule of fees is just for the new one, has just been uploaded onto the website. You will be able to see what that is. You'll be aware that the regulations set out the fees that are payable in respect of the various functions, and those go up annually by inflation, by the inflation rate, and we publish those on the website. Please note also that your employment change is free unless you have been deregistered. So note, please, that in terms of the legislation, if you are linked under an employer, if you are a full status agent or a candidate, then you cannot operate and you have to be deregistered. Okay, so if we receive an instruction from an employer to say, this particular person is no longer working for me, and we have that in writing, we are required by law to deregister you because you are no longer employed within the property practitioner industry. So if you are changing employment, please do make necessary arrangements to ensure that you send us your new employment letter and you register your new employment with us. before your employer is in effect, and it cannot be revived by you simply coming back into the industry. So even if you had a year to go on your FFC, you will have to pay for a new fidelity certificate. Now, further, you need to note that your employment change also needs an application form, an ID copy, and a letter of employment. And your application form is important because that gives us the correct information which we need to have, and your Fidelity Fund certificate will print incorrectly if that is not correctly uploaded. We also need to identify who you are, and that is proof for our records that you have asked for the change to happen. All right, somebody asked some questions to Thomas under the audit category relating to deregistration and people not operating as property practitioners anymore. Now, what happens when you stop operating is set out quite clearly in the Act, and it says what has to be done when you stop operating as a property practitioner. You have to deregister yourself, otherwise you will be liable for renewal fees, CPD compliance, audit compliance, etc. If you are an employee, it is the employee's responsibility to notify us that you are no longer registered and employed by a firm, which has to be done within 14 days. It's not the principal's duty to do that in terms of the Act and regulations, but however, you should be aware that many principals will do that simply because they want to protect themselves. They don't want someone operating out there under their name who they have no control over. Right, so we need to bear that in mind and make arrangements accordingly. Principals who stop operating need to see section 54.9 to section 54.14. And this is very similar to the old section 32.7 under the old Act. And this sets out what a principal has to do when they stop operating a firm. It is not simply a matter of deregistering yourself as a director with SIP-C. It is not as simple as sending us a letter and saying, please remove me as principal. That will not assist you in any way in being as a principal of an estate agent firm or as a director of any other kind of firm. So please note that what is required is for the principal to stop operating the firm, to shut it down, to wind up the trust account, to have it closed at the bank, and to provide us with a bank letter confirming the closure of the trust account and the date of that closure. You also are required to complete what Thomas referred to earlier as a winding up audit report of your trust account. So that is an audit of your trust account from the last day that was covered by your previous audit up to the day when you closed the account. That has to be submitted to us via the audit portal so that it goes to audit and audit can approve it. You also then need to send us a letter in writing requesting us to deregister the firm. When you have provided us with all of those particulars. When we have received them, your firm will be deregistered and be advised. Please be aware of penalties. Regulation 15.4 indicates that if you are going to stop operating, you are required to give us notice in writing before the 31st of October of the previous year. And in that instance, you need not renew your Fidelity Fund certificate. If you do not give us notice timeously, you are required by law to renew your Fidelity Fund certificate and pay us for it. And you are required to continue renewing it until you give us that notice that you are no longer operating. And that's why we have penalties building up, because people fail to do the deregistration process. And this is applicable to all industries. As far as the deregistration is concerned, if I can just touch on that again for a moment, we have a large number of problems with principals who allow themselves to be used as the principal of numerous different firms, and they do not maintain proper control of that firm. As the principal, in terms of the Act and regulations, they are responsible for the conduct of the trust account. They are responsible for all compliance for the firm. They are responsible for submission of audit reports and financial statements being audited or reviewed as required. They are responsible also to ensure that their candidates are properly trained and that their staff comply with the requirements of the PPRA and the Code of Conduct. So on that basis, being a principal is an on process. It's something that is extremely labor intensive, and it requires attention from the principal. If you have a principal who fails to do all of those things and who also allows somebody else to control the trust account, the chances are that the principal will find himself or herself in a position where they cannot obtain a fidelity fund certificate because one of their unsupervised entities, of which they are the registered principal, has failed in some or other compliance requirement. And if the firm is not compliant, then the principal cannot obtain a fidelity fund certificate, either for himself or herself or for any other entity that he is. We then go on to re-registration. And practitioners who have left the industry and deregistered with the PPRA, as they're required to do, may re-register by logging onto my PPRA agents portal. They can click on existing property practitioner, click on log a query on the far right, enter your personal information, select the query type, which should be registration query. The subject which you have to enter there will be application to re-register, and you will attach your supporting documents. Again, candidate or non-candidate or non-principal application form, your ID, and your letter of employment. If you're coming back as a principal, you will need to attach your business application form, your individual application form, your company or CC documents, which is your C registration certificate with the required information on it, your bank letter confirming your trust account